everyone. Okay, something that I've been talking about all this week and the week before that has to do with the price risk. And I've been talking a lot about the credit risk. I've been talking about what's going on in the economy, what the idea of what the market is looking at. But now I think it's time to make some money. And now is a time to start put it all together and how we are going to manage this process. Now, I've been talking a lot about price risk, right? So I think it's important. It behooves us really to start looking at what we mean by price risk. Now, before you do that, let me remind you a few important things. The first one is I want you to understand that what this channel is about education. I want to educate you on the way to make money in the stock market. Now, obviously, like everything else, you need to understand what you're playing with, right? So the first thing we're trying to do is obviously we don't want to try to predict the market because we don't know where the market is going, right? We want to take advantage of it. And the way the market moves, the stock moves, is that it moves based on impression. It moves about what the understanding is by the player as far as what they think is happening. And they trade on that basis. Simple as that. Now, what is really happening, no one knows. Even some of the numbers that we're looking at, for example, we had about 818,000 of payroll numbers that were off, right? So we thought we had so many people in a job created, and in fact, they were off by 800,000. So what are you going to do about things like that, right? So, and then we made decision on that. So it takes a while because if you look at that number, for example, that number essentially comes from the fact that, the government goes out, right? And then they survey a bunch of people they survey about 100 and something thousand businesses out of 60 million. And then they extrapolate on that basis. They extrapolate on that basis of those 130,000 people, 30,000 companies. And then based on that, they say, well, 60 million, this is what the 60 million other companies created jobs or not, right? So, and then they realize and because they were off after a quarter, they go around and actually check the real numbers and realize, oh my God, we are off, this is wrong. So you really can't, and meanwhile, people traded on that information. They thought it was there and it wasn't there, okay? So at the end of the day, what you need to understand more and specifically is what's going on, what the market, what do they feel, what do they think is happening, what is the mood? Right now, for example, the mood, or like I call it the story, is that we expect some action by the Fed to reduce rates, but reducing the rates only for the purpose of the controlling the inflation, meaning the inflation has been controlled, so we don't need to have the rates that high. So mortgages are going to be better, things are going to be better, small stocks are going to be better, things like that. Okay. The issue is, of course, is if the story drops over to the other side, which means we are in a recession and therefore we need to lower rates, then it's a different topic. But right now we have not shifted over. So this is very much a credit story. What we think, the credit can repay, how things are going and things of that nature. But there's another world out there. There's another world, and that world has to do with price risk. Price movement. Day traders make money out of the trade. How do we take advantage of that? Case in point, let us study and understand how Nvidia trade. Now we understand Nvidia, hopefully by now, what they do and everything else. But now let's try to understand how the stock trades, right? So look at this chart. Right? When I look at this chart, I could see that this is from 2024 through today, and you could see the earnings. And look at the interesting situation. This is the 50 days moving average. See that orange line? This is important. This is how you make money in the stock market. Now, as you could notice, most of the time, Nvidia, now the red dots are basically the gains and the green are the losses. You see what's happening most of the time since 2020, this year, the company is trading above its 52. For a while, like 1 month, 2 months, because the stock's going up, and then there's a bit of a decrease, and boom, we go below the 50-day moving average, meaning we're starting to lose more than we gain right here. See a bunch of reds, but then we slowly go back up again, right? And we're above the 50 days moving average. Of course, what happened in August, as you could see, things start since the beginning of July. there's been a bit of a situation where we broke through we broke through here, right? We broke through this period here, but here we broke again, and we kind of went way below where we went there. So there's two trends. Now you'll notice that I'm only talking about this numbers and the chart. I'm not relating to anything going on in the real world. Now, where you make the real money is that if you're able to equate this move with what's actually happening. Now, what has been happening for Nvidia, and there's only one stock, right? Technically, it's the number 9,000. So technically, what's happening with this stock is we are breaking to the 52 moving average, and as usual, like we tend to go back here. We tended to go back a little bit more than usual, and then we recovered again for a while. Unfortunately, as you could see here, we started breaking through again, but now we broke again here. So technically what's going to happen, you're probably going to have a couple of losses on its way to recoup again. Now, why do I say that? Because let's see what's happening in August. Look what's happening in August here. Right, the past couple of days. So the earnings, when were the earnings? That was the earnings right here. And they said, we doubled our earnings, we did fantastic. Boom, right? We lost here, and we lost money, and we opened here, and we closed here. So we made some money, and we lost, made, made, meaning they close up and down. So you could see the pattern coming back here, right? The pattern is coming back for Nvidia. Right? This is a 50 moving average, like I said before. Now you're going to say, well, maybe it's going to keep collapsing and collapsing. Hold on a second. Hold on. We're talking Nvidia here. This is not nothing. Now, I know that the stock has been overbought. I know everybody owns it. I know that they're telling you the story is over. But be careful who's doing the talking. Be careful, because this is telling me that we're ready to rock and roll all over again. Right now, obviously, when I look at my position that I have here, I have a couple of Nvidia positions. I have the Nvidia December 2024. Right now, I lost 2.92% since I put the position. If you look at it carefully, see, the chart hasn't been doing so well in the past couple of days. One day, where's the chart? See, this was bought. I bought around $8, and that thing is like $4. Okay, so and what's happening? Yeah, I know 50% loss, but don't reprieve. This thing is going to come back. This thing is going to come back because it's basically breaking again through, as we see, the 50 to the 50 moving average. And right now, people are basically cleaning up. And if you want to know more about some of the recommendation, look, these are all the recommendations from the street. Needham, New Street, Goldman. 135, 145, 165, 170, 180, 150. 200 reiterated. Only one is a downgrade. Okay, most are reiterated and upgrade. The thing is, I believe, I don't know exactly what's going on beside the trade, but I believe they're cleaning house here. They're cleaning house in order for you to be able to, right now, because you're losing, right, obviously, but I think they're cleaning, something is going on for another set of gain. Now, obviously, all this is tied very strongly with what's going on in the economy, because if the economy collapses, another situation. But I believe that September 18th, only 2 weeks from now, the Fed is going to lower rates. And the story, the PCE story. Now, remember one thing is if you look at the news, right? Let's take a look at the news. They believe that crucial September job record kicks off a new month. Look, this is what's going to happen this month. After a whipshaw month of market action, logged as fourth straight winning month to end, added 2.3% with the Dow Jones. U.S. market will be closed for Labor Day. The August report due out on Friday will headline economic release of the week ahead of update on job opening, right? So Friday, you're going to have some job openings. Then there's a closer look at labor. In July, we added 100. Many believe this point to weather-related. Look, I think there's something having to do with the, what do we have here? Isn't there something about PCE or with earnings release? Let's take a look at it. No plan to reverse scrapping, Chase Finance. Let's see. I think that we had some sort of a news happening with the, hold on. All right. Because they keep talking about the market crash. So the spotlight this week was on chip giant Nvidia. The company showed an AI craze was very much real after more than doubling quarter. more than doubling quarterly revenues. However, the market participant now used to blow out result and guidance. The firm's latest outlook failed to meet up the loftiest of expectations. Okay, fine. They were expecting too much, but see, still the company is doing fantastic. Now we have had some news, I believe. We have had some news having to do with the PCE. Okay, that inflation is under control. The point being, right now, is that we have an economy is under control. The inflation is under control. So now is the time to make money on Nvidia and also to make money on small stocks. Let's take a look at the small stocks that I own, and you'll see that it's a pretty good. Now, first of all, I want to point out one thing, is if you look at my portfolio, correct? The portfolio, the day gain on Friday was 1.51, and we beat the S&P again, okay? So that's a strong portfolio. Now, when I look at my portfolios of small caps, I'm just about with the Russell 2000, although the Russell 2000 is not really beating the S&P. But my small cap portfolio is doing okay. I'm sorry, this is really small. I'm still cleaning this portfolio, but this is not my real portfolio. This is not the one I want to look at. I want to look at, but I added a bunch of stocks there. The one that you want to look at is really VMC, EVTC. A lot of these things don't trade. The CWCO, ACMR, IMR. Look at this guy right here. Immersion Corporation, P ratio 5. Look at that, 8% in one day. Look at that. The beta is 1.49. The P ratio is 5.2. How we're doing here? We're doing fantastic because, and what is this company doing? The company's financials, let's see. This could be an interesting stock, I will tell you. 30 million, 38, 160. What's the EBITDA for this company? I wouldn't pick if it wasn't good. Look at that. Look at the EBITDA. Look at the cash flow. Look at the interest expense. There is no interest expense. Okay. What is this company doing? This company is basically, let's see, options analysis. Let's take a look at the profile. Is with this engage in creation, design of epic technology that allow people to use their sense of touch to engage with and experience various digital products in America. Okay. And if you look at the profile, if you look at the summary, nobody's paying attention to this stock at all. Look, Immersion, IMMR. Remember this name. How are they doing the past 5 days? The past 3 months, 5%. 6 months, 39%. Year to date, 33%. No one cares about these names at all. Why not? It's IMMR. Let's take a look at this in FinFiz. IMMR, Immersion Corporation. You see the 52 moving average? Look right there. 2004, we were around $6, and then since May, we were at $6, we were at $8, we almost doubled. And since then, we haven't done well at all because we broke through. Why? I mean, mostly buy recommendation. Immersion Corporation, risky AR investment amidst short seller skepticism. Reports second quarter results. Should we invest in Immersion ahead of second quarter earnings? This is in August. How did they do? Let's see. Immersion Corporation reports second quarter result, net repeatable, blah, total revenue. Second quarter, 99 compared to 7 million a year before. Immersion royalty and license was 52 million, second compared to 7 million. Immersion non-GAAP. On June, the company closed a transaction with Barnes & Nobles. As part of the transaction, acquired 52% common share of Barnes & Nobles Education. The second was very strong for the company. We continue to work to protect and monetize intellectual property. The 9th quarter dividend. That is not bad at all, people. Now, why did the stock drop so quickly? Let's see. Look, in July, 7 small stock with massive potential. Who do we have? New Leg, Gendex, having a list of small caps, Gendex. Who else is in that? New Leg, Double Trick. Immersion. Hey, what did I say? Immersion, Progress, the company net income, diluted. See, that's what they do, this kind of stuff. The problem is progressive based on the company. Indeed, the solid top performer allowed fundamental ability to derive constant core earning. Moreover, Immersion increases total cash by 18 million. The liquidity has reached 179, improved against 600. The 11% in cash boasts the financial flexibility. Indeed, the strong cash. This is the kind of stock that you want. Very low P. Technology oriented, can be done without any reliance on external financing. So, I mean, they're doing quite well for themselves, I have to say. 7 small stocks. Now, of course, you know what's going on. I was at $14 here, and now I am down to 10, and down to $9. I mean, you're breaking through the support here. See, when you break through the support, it tends to rebound, and this is due for a strong rebound. Now, of course, this probably tied also to the fact that the company is a small cap. I mean, it's, what is it? The market cap is 3. This is definitely a small cap. And it's going to benefit strongly, I'm telling you. I mean, this stock has gone from 8, right? How far do we go here? 2022. I mean, this thing was, look at this. Look at the volatility on this stock. We went from 8 to 16, down to 8, up to 14, 8. Look at this. Look at this. And now we're on the way down. This is a $16 stock right there, I could tell you. Look at the pattern. You see the pattern right there? $16 stock. Huge potential here. Why do I need to be worried? Look at sales. Very consistent, right? 35, 38, 39, 33. Now, earnings per share, growing. Now, the thing that you can do also, if you look at the financials, let's take a look at the financial for this company. I like this stock. This is a great stock. I don't know, maybe because I pick it. But then again, don't forget, the reason I'm paying attention is because why? Because it's up 8% in one day, right? Now, if I look at this thing, IMRR, let's take a look very carefully. Let's take a look. This is 50%. This is a 50% gain potential here. Look carefully at the financials again. Now, this company, I mean, operating income is positive. Let's see how much cash these people have. See, click on total assets, current assets, cash and cash equivalent. They have $56 million in cash. Now you're going to say, but how do I, well, you see the number of shares? Ordinary shares number is 31 million, right? And they have $56 million in cash. They almost have $2 of share in cash. So that $9.40, you're buying $2 of cash. That is not too bad at all. Having said that, what about long-term debt? Total long-term liability, right? Long-term liability, they have no debt. I like this company very much. You should look into it. Let's see exactly what they do to get a good feel for it. The digital experience is better than with haptic technology. Real immersive, more appealing, where we help to benefit from haptic has to offer. Okay, games, cars, and okay, what do we mean by that? Markets. So they're in automotive, in gaming, and in mobile. Okay, I could do that. What else do we have? So what does that mean? It means that in automotive, a premium car requires a premium touch. Immersion delivers high-fidelity haptics, ability to create intense texture, true-to-field pushes, and realistic clicks. The value of optics in automotive, with the ability to deliver texture surfaces, touch feedback, and force a better user experience, ability to advance application into the car. Okay? Create the ability to bring new users cases. Curved displays, dashboard button fixtures, large display. They're in the automotive market, okay? You have gaming, feel it. I mean, I don't have to explain the game, right? Mobile, high fidelity haptics bring new life to mobile. This is when you touch the button, users with haptic that feel real, okay? So that's great. But I want to know, what's the technology? Rich, the best, build faster with immersion product development, core haptic technology. Design, haptic use case, haptic design effects, library of haptic effects, partners, resources, development of haptics learning, immersion news. I mean, they look to me like they are everywhere. I mean, they're in gaming, they are in cars, mastering haptic in automotive. I like this technology. What I want to know, though, is who is their customer. So let's go into investor relation. Put your finger on the pulse of technology. 1993 they've been working on this stuff. That's a long time. You see the stock price here? You see the stock price? They're using my dear friend as well, using the same chalk fog that I'm using. Look at that, and look at that down. This is an opportunity, I am telling you. Now what I want to know, it's not going down because of the fact that they're losing money, that's for sure. Nobody's paying attention. Now what I want to know is our market. Vulnerable, we're offering consumer a new dimension of excitement. I want to know financials and filing. No, show me a presentation. Is there a presentation there for me? I want to know, who do they own? I want to know who manage, I mean, their customers. Who are their customers? That's what's important. That's what you want to know. Do they have more corporate governance, financial markets, press release, immersion agreement with Samsung, first quarter report, fourth quarter report, licensing with Nintendo, Razer. So they're starting a bunch of licensing agreement. Do they have a customer concentration? I want to know if they have a customer concentration. So what I do next, and I go into the filing, right? What you want to do, you go into the 10K, get into 10K right here. Let's see what it is that they're saying that they have. Risk factors, cybersecurity, market, financial statement, change in disagreement, director, business. Immersion is a premier licensing focused on invention, scaling through of innovative haptic technology, allow people to use their sense of touch to engage with product. Listen, that could be everywhere. So they drive adoption, they monetize, and they innovate. So basically, they license the technology away, which is great. Haptic and its benefit. While the digital world offers many advanced technology, it often fails to provide meaningful touch experience. Immersion haptic technology enhances digital experiences, restoring the missing elements of confirmation, realism. Okay, markets, mobile, your mobile communication, cars, wearable, gaming, automotive. We expect the mix of our total revenue for market to remain fairly consistent. Sales, our revenue fluctuates quarter, generally higher in the third quarter in the fiscal year. Our biggest source of company derived from the decision made by internal design group and our OEM. We expect that these internal will continue to make choice regarding whether to implement haptic or not. Well, obviously everybody wants to touch and feel. Risk factors. But who are the company's business? Where do they sell? That's important. This is a very interesting company that all of us should take a look at. I like this company a lot. What else do we have for this week? Small caps. How's IMM doing and these guys? So Vulcan Technology, look, Powell Industries, okay? I mentioned that to you, right? Powell Industries up 2.85%. The past 3 months, but it's down because of what's happening in the market. This whole thing is going to explode. Look, Powell, 15p of 15. This is good company here, Immersion, right? I mean, look at that's interesting. When you click on this, it takes you directly to their website. That's very nice. Seg Technologies, Software Application USA. Shark Comparative Short Interest Financial Options. Are they options on this thing? Interesting. Look at that. You could buy an option. Look at that. Change. The option is up 30, but this is option. This is in September, but can we go like a November option, for example? Okay, last close, 460. What is let's take a look at the bid. Let's take a look at the strike price. There's not much volume, but look at the strike price on this, 750 with $10, 44% in 1 day, 33% in 1 day potential. I mean, there's a huge amount of opportunity in this market. I like this a lot. So what else do we have? Let's take a look at other portfolios. So Powell Industries is doing very well. As you could see, they're all up, right? Don't forget, the Russell 2000 is 0.67%. We're beating the Russell 2000. Powell is beating the Powell. ACMR, these are all my companies. VMC, IMR is a new one that I think we should take a look at. Okay, everyone. So what to look at for next week? Lots of important news. We're getting closer to September 18. Expect a big return on Nvidia. Expect a big return on the stock market, especially as we keep announcing that we're going to have some much improvement in the inflation numbers. So therefore, as the Fed lowers and lowers the rate, it's going to look better and better for small stocks.